Alan Olivier is here, all the way from Durban. Got caught in the traffic, I heard, from our sister program on RSG a bit earlier, Alan. But you made it to the studio, and you also made some very good financial results. 95% growth in headline earnings per share. It's almost like a mining company. But you guys have been pretty smart. You've taken some big bets. The question on David Shapiro's lips and on most of the investment analysts is, how long can you keep this going for? Because if you've done the bets, you got into these contracts. We know that the shipping market has fallen flat in its face, and that's where your area of operations is.
Yeah, Alec, thanks very much. Yes, it was a good year. It was an exceptional year. We're not going to repeat those earnings, particularly in our shipping business. They're not going to be repeated. The market has fallen, particularly the dry bulk market has fallen. The tanker market hasn't come under the same sort of pressure. But that has obviously been influenced by what we saw happening in the markets at the end of last year.
There are lots of different shipping areas. Where is it that Grindrod focuses?
Well, Grindrod is focused on dry cargo and on the tankers, the product tankers and chemical tankers largely. And then we're obviously involved in the freight services businesses and some trading. All right.
But on as far as the shipping side, because that is by far the bulk of your earnings, what is the areas where you focused on? Is this where are what indicators do we look at? The Baltic dry bulk, for instance, as an index is down 90%. Does that mean that your profits are going to fall 90%?
I think the answer, it was down 90%. It's no longer down 90%.
How much is it down now?
Well, it's down at about 2,000 from a high. Well, 2,000, I say it's down probably 80-odd% from its high. But its high was exceptionally high.
It was not. I said 90%. You said, "Oh, it's not so bad. It's only down 80."
Well, I think you've also got to put the high into some sort of perspective. I mean, the high was ridiculously high. I mean, those highs were light years higher.
Year
than
on
any
year, on
previous
average,
high.
how much is it back?
Well, it all happened in the last few months. We hit the high and hit the low in a very short period of time. And you were talking about oil earlier. It's done the same thing as oil. You know, it hit the all-time highs, and a few weeks later we were at the all-time lows.
So does it follow what we see on oil, for instance, $150 in June last year, down to $50 or under $50 today?
I think there are two drivers. One, volumes are obviously a driver. And at the end of last year, when we had the credit crisis, the market stopped. And when the market stopped, there was no cargo for the ships, and therefore rates fell. But those volumes have returned to the market. And a key item, and particularly in the dry bulk sector, is iron ore. And iron ore has ticked up. There's been huge growth in iron ore demand over the last few years. China is the biggest importer of iron ore. And China got up to a record in about the middle of last year of 47 million tons of imports of iron ore. In October, it dropped down to its lowest level of 30 million tons. That's 17 million tons. Now, how many ships do you need to carry 17 million tons of iron ore in 1 month? That's a lot of ships. And that's why the freight rates just fell, because there were too many ships and not enough cargo. But this last month we're back to 42 million tons. So there's been a significant recovery.
David Shapiro, sorry, Alan, there's a tip on the iron ore side. We've been talking to a couple of the iron ore guys, and they say things aren't as bad as we seem now. Alan's confirming it.
Particularly where they've got those contracts in place. Sure.
But you've also got contracts in place on your ships.
No, we certainly do. And right through the good market, we never earned the top of the market, because we've always had a contract base, sometimes too much contract base. But this year we're going into the year with 62% contract base, not at the high levels that we've had before. So the earnings are going to come down. They're certainly going to come down.
Well, that's 62, or roughly 2/3 of your operation. If you were to rewrite the contracts today, how much lower would you have to go?
I think you wouldn't get the contracts today. The market is that different. There isn't a lot of transparency out there into the market. You would get some contracts, but you certainly wouldn't get the level of contracts. And those contracts go out all the way to 2014 for iron ore, which we ship into the Middle East for the Middle East millers.
Again, it's an interesting story here, because we spoke earlier in the week, David, you remember, with Ian Kirk from Santam. He said had they not sold their equities, they would have been 1.4 billion rand worse off. Alan, if you had not gone into these contracts, how much worse off would shareholders be today?
I know they'd be significantly worse off. But I think on top of that, the other things that we did is we protected our balance sheet very early on. We sold 5 ships during the year. We made 500 million rand out of selling those ships. That's cash on our balance sheet. Our cash is turned from a 29% geared position to a 5% ungeared position. We've actually got cash, net cash, sitting on the balance sheet.
How many
today.
other shipping companies are in a similar situation?
A few. Very few. I mean, we've seen. I mean, you've seen it probably reported. There are a lot of shipping companies in big trouble.
But why did your chairman, Ivan Clark, sell 120 million rands worth of shares in December, the 29th of December, nogal, when everyone's on holiday, and it kind of sneaked under the radar screen?
Yeah.
If you sold them at 15 rand a share, share price is now 14 or just below 14 rand. You got to wonder if he knows something that the rest of us don't.
I know certainly he doesn't know something that the rest of us don't. But it was the unwind of a transaction that was done 2 years previously. It had to be reported then. Just prior to that, he bought the same amount of shares just a few weeks before that. So they just didn't set off.
All right, having a look ahead to the year, you have said that you're not going to repeat these numbers. Shareholders will say the earnings yield today is 36%. So if your profits halve, the earnings yield is still 18%. Is that the kind of number we're looking at?
I'm not allowed to tell you that.
No, sure,
but certainly, I mean,
how exposed are you?
I would certainly expect us to earn somewhere around that sort of number. I think what we've said is we expect to get a reasonable return on the shareholders' funds, and it's that sort of level.
And the dividend yield today is 9.7%, very well covered. Headline earnings R5.11, dividend of R1.36. Are you pitching it there because you can repeat it next year, even with a big decline in earnings?
I think you should really look to the dividend cover position. Our policy is around about 3.5 times covered. I think we would tend to try and keep that. But clearly,
even though you've got plenty of cash in the bank, no debt?
We have, but the big thing, and I think I've said this to you before, is that the reason our balance sheet looks like it is because you cannot raise finance, you cannot raise equity in weak markets. And our big opportunity will come in a weak market. And therefore we need to keep ourselves in a position so when that does arise, we can take that opportunity.
Have you been buying any ships yet?
None. It's too early.
Too early to buy.
Early.
How long would you give yourselves before you start actively
I wouldn't be surprised if it wasn't even this year. I think we've got a bit of a road still to tread.
Well, David, if you want to go for the South African version of the Greeks bearing gifts, that's what they used to say. Never buy a ship from a Greek. You can buy them from Norwegians, but not a Greek. Then you've got to look at the Grindrod team. They've done very well.
I think it's a company that's been underrated. I really mean. I think the market is always trying to find something negative, and they're always surprised on the upside.
So you're going to buy the shares?
Well, we have to look at it. I think at this dividend yield, even if half profits, I think that's where you want to go, where the company's got money, and we know how well they've operated in the last few years.
What I liked was the story about the iron ore. I think go and buy some arm.
But 60%, they've
Exoros.
got contracts already for 60%. Plus a lot of cash to take advantage of cheap ships that come onto the market.